So just be wary of those types of tricks that some of the local guys will do just to kind of get you, in the door to sell your stuff. And it's not just that they're going to turn around and sell it to the next guy that walks in. That's risky to them because maybe the next guy doesn't walk in for a week or 2 weeks. I think what's happening is that's being siphoned up into the wholesalers, and that's being siphoned into the market to satisfy demand. And that tells you right there that physical demand is a lot stronger than easily gotten physical supply. So going back to the COMEX, what they have on their books is not completely liquid, and we're not sure we agree with what they have on the books anyway. And you're starting to see this. I think we're about to start hitting that gold mania phase. It's going to be a stair step. It's going to go up. It's going to pull back. It's going to go up and pull back. It's not going to go up in a straight line, but I think we're starting to see the gold mania phase coming back in earnest, and we're going to start, putting pressure on that all-time high in gold and silver. Hey everybody, this is Rob Kientz with GoldSilverPros.com. I am out on site today. We're broadcasting from the great city of Guanajuato, Mexico, as we prepare to go on a mine tour tomorrow. In fact, by the time you guys see this video, I will be knee-deep in gold and silver ore at a mine for Guanajuato Silver. We will bring coverage of that, including some video I'm going to be taking and some pictures, to the channel soon. I'm so excited. It's going to be a lot of fun. This is the first mine tour I've done in Mexico in almost 2 years, and the last one that we were able to do was actually in the States, out at Silver Symposium for Silver Hammer in Idaho. But loving to get back to the Mexican silver mines. They're legendary in terms of the amount of silver they produce, along with Peru and some spots in Argentina. And so it's a lot of fun when I get a chance to come out here and take a deep dive into one of these things and talk to the geologist and look at the projects and dig into all the details and meet a lot of the other guys who cover this sector too. It'd be a couple of other analysts that come out here with me, and we'll sit down and share thoughts on what we think. But I think it's all going to be positive and a lot of fun. So, of course, I'm in my hotel room and thinking about what to do for the show, since we're not doing a live spot this week as I'm out on site. And my good friend Jamie said, hey, Rob, what you should do is a show on how to save in gold and silver for those of us that are just getting started or wanting to learn how to build a savings plan. And I thought, that's a really great idea. And Jamie, of course, is as smart as she is beautiful. So I'm going to dedicate this show to her. Thank you, Jamie, for the suggestion. And that's exactly what we're going to talk about. We're going to talk about the value of having gold and silver, not only in your portfolio, but putting yourself on a savings plan. So that way you can buy it whenever you have money, whether it be every month or whenever the funds are available. And you can take advantage of dollar cost averaging and low prices that we often see as we go through the different cycles in gold and silver. Such a great idea. We're going to dive right in. Before I get into doing the savings plan, I wanted to talk about the breakout in gold that we're having. So we are going to grab a Chrome tab, and we're going to talk about gold price first. So here we have the gold price on goldprice.org. Ended up at about 1872 at the time of this recording, which is about 7 p.m. on the 14th. Not too bad. Gold was up 0.71%. And silver was up 1.33%, although something very interesting happened to gold. Not only is it up for one of several of the last few days, but we've broken through what I think is going to be the end of this cup and handle formation. I will go ahead and share that screen real quick, and we'll talk about why I think we've broken through the cup and handle formation by going over to our stockcharts.com chart. And as you know, I've been documenting this cup and handle formation in gold for quite some time. Here is the cup, looks like a teacup or a coffee cup, and then the handle is usually about a 45-degree angle downward sloping formation that occurs after the cup formation occurs. So the handle will be on the right, and that would signal that we're about to enter a breakout. It's a very bullish chart signal, whether it be for stocks or for precious metals or basically anything that you can chart, any asset that you can chart. We've had this cup and handle going for a while. It's dated back to about mid-2020, so I would say a year and 7-8 months at this point. Well, at the 1870 mark, which is about where we are, it looks like we've broken out. Looks like this is the downward slope of that handle. Now it was opening to the downside, but then it's recovered, as you see by this green line, to the upside. And then all of a sudden we popped above this downward sloping trend line. In other words, we've broken through resistance that you see here at the beginning of this cup and handle dating all the way back to late last year. In fact, we broke out basically last October, fell back down, and we're testing this breakout again, but this looks a little bit stronger because we passed through that line a second time. So we're going to be paying attention to this, but I think it's quite possible that we've had a breakout. So let's go to a shorter term chart. You can see here is the general direction of the handle pattern, and it looks like we're trying to break out to the upside. And I think because of the momentum we've had over the last week, it's entirely possible. Now, a lot of this has to do with the news out of Ukraine. A lot of this has to do with the persistent inflation and a lot of the economic numbers and things that we're seeing. And I think that really speaks to the fact that the market is now turning to risk assets like gold and wanting to invest in them again. Now, I'd like to see a little bit tighter or higher volume than what we have right here. We don't have just astounding volume on the derivatives markets. It would be nice to see a volume like this number where we had a really sharp uptick in the price of gold in 2019 leading into the first 2 or 3 months of 2020. We don't quite see that volume yet, so I don't think everybody's getting into gold, but I think some people are starting to move into it. And my contacts are telling me from multiple different sources that the big money managers are starting to go into gold and they're starting to put it into their portfolio. So I think the big money is starting to move in. And eventually, I think the generalists will too. And when you see the generalists move in, I think is when we'll have our next big uptick in the gold price. So overall, not too bad with the gold price. All right. So that's gold for the last few days. I really wanted to chat about savings with you guys. So it's one of the questions I get the most. Rob, how did you get started in gold and silver? How did you start saving? How did you get into your position? You know, did you liquidate a bunch of investments and move money over, or how did you really get started? Well, going back to my story, I started getting into gold and silver back in 2008 and 2009. Those of you who have followed me on the channel for the last couple of years will know the reason I did that, but I'll tell everybody that may be new here, only followed me for the last few months and I haven't mentioned it. I was working in consulting back then. I was working in the Big Four for Ernst & Young, which is one of the Big Four public accounting companies. I was a technology auditor. I also did some business process audit, a little bit of accounting audit as well. Sometimes I did all at once. But I also, in addition, ran these big consulting engagements for the company. So we would break out of our traditional audit mold and go do business process redesign or something like that. Well, we got hired, Ernst & Young did, by Morgan Stanley, who had bought a subprime mortgage servicing company that had gone defunct. And they had about 52,000 loans of basically, adjustable rate mortgages that were imploding as the mortgage crisis and the Lehman and all that stuff going on in 2008, 2009. So we had to take it and fix the loan portfolio. It was messed up. The data was wrong. They were charging customers the wrong amount. The interest rates were not being calculated correctly, all that stuff. So that was my project. And I got to see the mortgage market from the inside. And after seeing the problems that we had, all the misserviced loans, the adjustable rate terms and conditions, the fact that the servicers could not keep up with keeping track of everything, the investors were not getting paid appropriately. I mean, it was from start to finish a gigantic train wreck. And because that market had just blown up, and the country really, and a lot of these mortgage servicers that were getting into the game, hadn't put enough money, especially the newer ones, into their systems to be able to handle just this fluctuation of investment into the mortgage markets. And then when it started to implode, they couldn't handle, that either. So I was involved in that, and that really woke me up at how bad our economic problems were. I had just considered up until that point what I was taught in school and taught when I took my financial licenses way back when, the general market cycle, the general business cycle. But this was something different. This was something endemic in the banking system I had to find out. So I did a bunch of research, came across Austrian economics, came across gold and silver, and I started investing. So how did I get started? I really just started buying a coin at a time. I bought a little bit of this and that, and I would wait and, kind of watch the markets and see what's going to happen, like a lot of people do when they first get into it. And then I'd buy a little more and buy a little more. Pretty soon I was buying larger amounts. Sometimes I would go in and buy 5,000 or 10,000 at a time, but I didn't really start that way. I started off small. And the reason I was able to buy 5,000 and 10,000 at a time is we would save money. And, when we knew that money was free and clear and we could invest it, I invested in gold and silver, and I considered that still cash because I could turn around and go back and sell it again. Now, I could sell it at a partial loss if the price had ticked down since when I bought it, but the stability of the gold market then, and the gold was going up from 2009, 2011 anyway, you didn't worry too much about that. And even when gold came down from 2011 all the way through 2016, before, 2016, 2017, before it started to rebound, I really wasn't all that concerned, because what I had seen in the economy led me to believe that gold and silver were going to rise again. And they have, as we saw by that cup and handle pattern that I showed you guys. Anyway, that's how I got it started investing. And what I did along the way, after I left EY, they gave me the option to redeem my pension fund. EY did have a pension. Now, it wasn't a whole lot of money in there. It was substantive, but not enough for me to retire. And I thought, any pension fund probably, by the mix of investments they have, the risk assets, probably is not going to have the value by the time I retire. I had another 20-some years. So I just redeemed it and paid the penalty, filed it on my tax return, and I converted that pension into some gold and silver and some into cash and paid some bills. So along the way, I kind of got out of what I thought were riskier investments, such as 401k pension, those types of things. Even some of my real estate, I sold the last of my properties in 2018 when I was a real estate investor, and I moved some of that into precious metals too. So I took the opportunity over time, when I had money, whether from selling other investments or just that I had earned in my job, to basically put that into gold and silver. And that's, I started small and kind of worked my way up over time, and I became a bigger believer in gold and silver, as time went on. So that's basically how I did it. Now, how would you do it if you're starting off with a small budget? And a lot of people do. What I say is read as much as you can. Of course, this is not financial advice. Here's my disclaimer. Please don't trade on this. Please don't take any of my recommendations. I'm just going to tell you what I do and how I did it, but it's up to you to do your own research and contact a financial advisor that you trust should you want to get into gold and silver. But essentially what I did was I moved in slowly. I read a bunch of information. I got more confident. I did more. And pretty soon I was a huge believer, and I started putting more and more into it. But I built up over time. I really didn't go all the way in. You can certainly do that if you want. If you've made up your mind to do that and that's what you decide you want to do, certainly that's your choice. But I would start with small amounts. Now, back then, I wasn't aware of any savings programs in gold and silver. Pretty much was kind of up to you. Hey, put some money into it. And most of it was stuff that I would buy. And I would try to, it took me a while, but I found a place to store it kind of local to me, within driving distance to me, where I could store it at a private security vault that I felt comfortable with. This is before I learned to basically invest in like Glint or One Gold, or, putting money into a vault held at Brinks or something like that, vaulted precious metals. I didn't buy vaulted precious metals at first. Once I went a little bit bigger into it and decided I want to have this at home, and I didn't necessarily want to leave it all in this private vault. I wanted to have a couple of different locations around the world to store my gold to reduce some potential geopolitical risk. I started looking at ways to save it with services that would guard the gold and silver. And so now I have a mix. I have a mix of stuff I can get to pretty quickly. I have a mix of stuff, at various vaults around the world that I feel comfortable with. And I've kind of spread my jurisdictional risk, geopolitical risk, if you will. And that's kind of the way I've done it. I did want to show you now, however, there's a company that we've covered before when we did our video on storage options, where we covered 4 companies. One of those companies had an auto invest option. So I'm going to take a moment to share with you that auto invest option, and it happens to be with One Gold. Now, One Gold is the service from APMEX. A lot of you will recognize APMEX as one of the largest dealers in the United States. Well, they started One Gold with the option to allow people to store it. So you could buy it at APMEX or through One Gold, and then never have to take physical possession, just store it with them. Now, whether or not you want to do that is up to you, but they do have an auto invest option. So what you can do is set up this option to auto invest money, out of your account every so often. And they even have a calculator on their website where you can say, okay, I want to put initial investment of this amount, monthly investment of this amount. What will I have in 15 years? What's the average annual return? And there's some assumptions made in the metals appreciation, so on and so forth, but they're basing this upon market data. It gives you an idea of calculating where you can end up over a certain period of time. So you can actually use this, work backwards from it to set yourself a goal. Say you wanted $35,000 in 15 years. You could put $35,000, into the calculator and work backward and figure out what your initial investment would be and what your monthly investment would be. And it's a cool way to kind of do this like you would do with your 401k or your bank account, but in gold and silver. This is a really cool calculator that they have. And, that's something that could be an option for you if you want to do that. Now, there could be some other companies out there that have an auto invest option. I'm not really familiar with a bunch of them, mostly because I did a lot of my investing in gold and silver really before those started becoming popular, but I'll do some research into some of those for you. But that's an automated way to do it. sort of like you would do with a savings plan or a 401k or a pension or whatever the case may be. Now, if you don't want to store your metal at One Gold or other depository and you're really just building up and you want to have some, in hand, I would say just make friends with a local coin dealer. I would say shop at 2 or 3 locally. Do a couple of small transactions with them. Figure out which ones you think you can trust, which people are being the most honest, which are most competitive on price and service. And remember that these guys may be buying back from you when you want to sell it. So you want to make friends with them and be friendly and really work with them and letting them know what your goals are, so that you have those easy, quick outlets to get sales when you need it. And I'm going to show you something with regards to that here in a moment, with a dealer that's really looking for some gold and silver, and I think it's quite funny. We'll get to that in just a sec. But find the dealers that you trust, the ones that'll be straight up with you, honest business practices. Not every local dealer are the same. Some of them, can have higher markups. Some of them can try to move you into certain types of coins you may not want to get into, like collector's coins if you're not ready. I'm a big fan of collector's coins and numismatics. But for a beginning investor, I would say don't do those. Start off with the regular bullion ones. They're easier to learn, easier to understand, and then if you feel like getting into the collectibles and numismatics later, you can do that when you have a little bit more practice under your belt. But make sure you're getting people with not a high pressure sales pitch. Make sure you're going to a dealer who's been there a long time. You recognize the face of the people every time you walk in. Talk to other customers there and see what their experience has been, whether they're buying bullion or they're also selling jewelry and other things like that, and what their experience is. Look at the Better Business Bureau and see their ratings. And basically just shop around like you would anything. And just do a little bit when you can. Whenever you can set some money aside, put that in your cookie jar. Take that cookie jar up to your local dealer when you can, and just buy a little and buy a little and buy a little. And that's basically how you're going to save and build your little bank account, your precious metals bank account. So there's automated ways of doing it. Of course, you can also do the option with Glint. Glint has a card, like a debit card, where you can either ACH or send the money via some other means. Glint Pay's website will show you how to do that into your account periodically if you want. Now you control when it goes in, and then you save it there, and then you have a debit card to use it whenever you want. So that's literally physical savings. It's savings because it's gold in Brinks, I believe, is who they house it with, fully, audited, fully insured, all that good stuff. Just like, you would store your gold bullion with any of these other storage places. But you have a debit card tied to it, so you can actually spend it in real time. So you just say, hey, I got to buy some gas. Hey, I got to pay some bills. Whatever you can use your credit card for. And you can spend your gold, when you need to. And that's another way to do it. And that's really cool. And that's why I have a Glint account, because I have a certain amount of money in there that if I ever just need to, I can spend that money off the debit card. But that Glint account acts as a gold savings for me, which is really, really cool. That's another way to do it. So if you go back to that video that I had about a week or two ago when I'm comparing like the 4 different major types of gold and silver storage options, the 2 companies I mentioned, One Gold and Glint, are in there. Of course, there are some other ones as well, but those are ones that sort of have a savings option also with a way to, to get access to your gold if you need it. So it's kind of like in some ways a bank account, and those may be a couple options for you. Of course, do your own research. Yeah, I'm sure there are a lot of other companies out there that may be, worthy of your attention as well. All right, now, it's funny that gold has been up over the last week, and now you start seeing these ads come out for people wanting to buy your gold and silver and basically saying, we're at the top, sell your gold and silver, and they're offering over spot for gold and silver, which is a little bit disingenuous, because if you think about it, why would a dealer who makes his money on the spread between what he's going to pay and what he's going to sell for gold and silver offer over spot if we're really at the top? Wouldn't that be guaranteeing themselves a loss? Because if we're at the top and they're paying over spot, they're guaranteed to lose what they paid over spot plus where the price is going to drop to because we're at the top. But you're going to start seeing these come out. And this is one of the signs that gold's entering another bull run. It's not just the technical charts we look at. It's these schemes that we look at. Basically, when companies start to advertise for your gold and silver, they want it. Why do they want it? Because they think it's going to continue to go up and they're going to make money off of it, because people are coming to them, the wholesale companies and the big players are coming to them saying, get as much gold and silver as you want and pay a premium. Why? Because the demand for large amounts of gold and silver is going up. That's why is what's happening. And when you start to hit a new bull cycle, the beginning of that bull cycle is when that big demand comes from the big money. The big money wants to get as cheap as possible. So they've seen this cup and handle. They've seen the economic issues. They're wanting to get as much gold and silver as possible. And what's happening is the jewelry stores and local coin dealers are advertising paying over spots. I'm going to show you an ad that I got from one of our subscribers, basically talking about this. So this is from a jewelry store, and this is the actual ad. It says, maybe the most important email of the year, over 100% payout selling gold and silver. Today we saw one of the biggest single-day jumps in gold and silver ever. This is sent to him on February 11th, which was Friday. Our appointments for next week are already filling up. We want to be sure you can be booked. If you're interested in cashing in at the top, book your spot now. Cashing in at the top, because of course we're at the top. No, really the top in gold was like 2060. We're sitting in the 1870s, right? So it's not really anywhere near the top, and they know that. But a lot of gold and silver buyers, especially they're just getting in, don't know. And if you send this email, you're going to get a lot of people, especially, you know, maybe older people or people less educated on economics. Are going to say, yeah, I bought some gold and silver before, maybe some jewelry, maybe some candlesticks, maybe a couple of coins. I'm going to go sell them, you know, because maybe it's up from where they were a few years ago. And they'll think it's the top. What, you know, why would they question their local coin dealer or jewelry shop who seems to be the experts? So look at what they're offering. 1 ounce U.S. gold eagles, brilliant, uncirculated. They're paying 100% of spot plus $25 a coin. 1 ounce U.S. silver eagles, brilliant, uncirculated, 100% of spot plus $2 per coin. Morgan and Peace dollars, 100%, so right at spot, no bid-ask spread there. U.S. pre-64 silver, that would be dimes, quarters, half dollars. That's U.S. issued dimes, quarters, half dollars that have either 90% or 40% silver in them. They're paying 100% of spot on that. They're also paying for diamonds, watches, fine state jewelry, things like that. Scrap gold in any amount up to 85% payable. Most other bullion 95% to 100% payable. So they're paying spot or almost spot for all this bullion, which I find interesting because jewelry stores typically don't do that if they're worried about downside price risk. If they're worried that gold's going to fall back down to the high 1700s, there's no way in heck they do that. What they may do is say, hey, I've got enough gold right now, I don't want to buy any. And if you got too much in stock, a lot of times, you know, and the price is moving against what they paid for it, they'll pull it off the shelves to make it look like they don't. And they'll just say, hey, we're not buying right now, and we're not selling right now. They don't want to sell at a loss. They want to buy low and sell high. So when they send out an ad that basically says, we're paying you near spot or spot plus, that means they expect it to go up, not down. So just be wary of those types of tricks that some of the local guys will do just to kind of get you, you know, in the door to sell your stuff. Because, and it's not just that they're going to turn around and sell it to the next guy that walks in. That's risky to them because maybe the next guy doesn't walk in for a week or 2 weeks. I think what's happening is that's being siphoned up into the wholesalers, and that's being siphoned into the market to satisfy demand. And that tells you right there that physical demand is a lot stronger than easily gotten physical supply. So going back to the COMEX, you know, what they have on their books is not completely liquid, and we're not sure we agree with what they have on the books anyway. And you're starting to see this. I think we're about to start hitting that gold mania phase. It's going to be a stair step. It's going to go up. It's going to pull back. It's going to go up and pull back. It's not going to go up in a straight line, but I think we're starting to see the gold mania phase coming back in earnest, and we're going to start, you know, putting pressure on that all-time high in gold and silver. So if you're wanting to save, and getting back to the original idea of this video that Jamie gave us was, how do you save? Well, now might be a good time to save because if prices are going to start rising, you want to get in there now before they've risen too much. It's still below the all-time high of about 2060-ish. And so that still gives you plenty of wiggle room to get in there and start saving. So, you know, so look at the auto invest option with one gold. Think about maybe going to Glint Pay, or you know, having that debit card access, you know, if you want to redeem, if you need to spend it, you know, or think about going to your local coin dealer and looking for the best deals and, you know, participating. That's an option for you to do that. So that's probably going to about wrap it up for tonight. Like I said, I'm getting prepared in my hotel room for the big site visit tomorrow. Going to start out about 7 a.m. in the morning, grab some breakfast, and head out to site. Going to get some video, going to get some photos. We'll mash that up together in a nice video for you guys and throw it out on the channel for those who are interested. And we'll be bringing more content later this week as well. I got another idea for a video for our Thursday premiere. assuming the internet holds out here in Mexico. Usually it does. We'll put that on the channel Thursday. I'm not going to say what it is, but it'll be interesting. Then we're also later in the week going to bring Andy from Miles Franklin back on the program to talk about gold and silver trends, especially in the physical market and what we're seeing. And I think it's really timely that we do that because we're seeing the breakout occur, I think, from that cup and handle pattern dating all the way back to 2011. And it looks like we're maybe about to get in the mania phase. It looks like a lot of dealers are trying, to pay premiums to get that gold and silver in. I think the big entities need it. I think it's being siphoned up into the big markets. My suggestion for you guys is not to sell. My suggestion for you is to keep it because it's possible that gold and silver become an obtainium in the near future if we continue to hit massive inflation, these other economic problems. And if the geopolitical things heat up, harking back to Ukraine, Taiwan, Hong Kong, all these potential conflicts, if that stuff heats up, people are going to flock to safety of gold and silver as well. And it's really going to drive demand. And we're not even talking about the industrial demand for silver being up 110 million ounces this year, according to Silver Institute, which puts it in an even bigger deficit it was last year, where 1.1 billion ounces the Silver Institute expects to be demanded in this year, 2022. So that's going to be a huge uptick in the demand for silver. And I think we're starting to see those schemes hit retail where they're starting to siphon off gold and silver that we, the people, are holding. And again, if you have that gold and silver, you may not want to let that go because in the next couple of years, it could be a lot harder to obtain, as various forces in the economy and geopolitically tend to heat up. And just to recap, remember, there are different options for you to save. If you have questions or want to talk about saving, put them down in the chat. And we'll talk about that. Always good ideas for how to save, where to buy it, how to educate yourself. I'm down for answering all those questions and sharing, my stories early on about how I did it, how I found local dealers whom I trusted, how I found companies online that I trusted, the process that I went through, my thought process on moving from just using available cash to really exchanging different retirement accounts for gold and silver as I got more into it, enthusiastic about it, and did more research. All sorts of different things that you guys want to talk about, throw it down there in the comments and we'll discuss it. And if this video does well, we may do a follow-up. We may talk about some advanced strategies in gold and silver investing as well and put that on the channel, because I know that we have a lot of enthusiasts who like the physical metal. All right, until next time, guys, it's been Rob 𝙂𝙊𝙇𝘍 with Gold Silver Pros. Hey, everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on 𝙂𝙊𝙀𝙊𝙎. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or ARC Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.